Stock Play of the Day is an educational program. Any statements made by Ally Invest employees are not intended to be or should be considered investment advice, a recommendation to buy, sell, or hold a security, or a recommendation to adopt an investment strategy.
Hello and welcome to the Stock Play of the Day. Today's stock is Regeneron. We'll discuss, should we pass or should we play? Hello, my name is Brian Overby. I'm the Senior Options Analyst with Ally Invest.
And I'm Lindsay Bell, Chief Investment Strategist with Ally Invest.
All right, Lindsay. We're videotaping for the Stock Play of the Day from beautiful Wisconsin, and we have some great temperatures, so I'm doing it outside today. So I get the benefit of the beauty of Wisconsin as we talk a little bit about the markets. I see in the S&P 500 index, we just have a nice little channel that has formed. We're slowly making new highs. We came back a little bit today, but we're still staying within that channel. What do you see in the markets this week?
Yeah, it's a busy week, Brian. I'm jealous that you're out of Lake in Wisconsin. I'm in Charlotte. It's raining here, but it is hot. So I guess I have that for me. But looking at the S&P 500, like I said, it's a busy week. And today we're getting a bunch of different economic data. Some of it's pretty mixed to negative. So I think the market's reacting to that. But also I want to point out, Brian, that the market has just doubled since its March 23rd low. And also we're anniversarying the 1-year anniversary of when the S&P 500 made a new high post-pandemic. So new high versus pre-pandemic levels. So the market has been in a strong upward trajectory since the lows of March 2023. The market is up. I think you're seeing those headlines. Maybe we're seeing some profit taking here on some weaker economic data. We got retail sales was the big number that people were watching this morning. Sales declined 1.1%, which was worse than what the consensus estimate was for a 0.3% decline. Now, that being said, I will point to the fact that retail sales are still up almost 16% on a year-over-year basis. So still very strong numbers, especially as we start to cycle a part of the year last year that we saw retail sales and the consumer began to gain some strength. So I think overall, while the headline was a little bit disappointing, the year-over-year number is still very good. Also, we got earnings from some of the big retailers this morning, Walmart and Home Depot. Walmart beat expectations. It was a clean, nice beat. They were saying the back-to-school selling season was strong, and they're seeing that strength continue into the first month of the new quarter, which is August for them. So that's a positive on the consumer. But Home Depot, on the other side, was seeing that the do-it-yourself home improvement market is starting to slow. And that also ties in with home builder sentiment that we also got this morning, which we saw a dip in that. So some softening in the housing market. People were kind of anticipating that we might get to that point. Home Depot is coming up against some really tough comparisons in the second part of the year. So we're seeing a little push and pull between the consumer. Also, another thing impacting the market overall in general this week is the rise of that Delta variant. And so that has investors a little worried about what the growth trajectory of the economy of earnings is going to be. So that's something we're going to keep a close eye on. And some speculate that had a negative impact on retail sales. Also, stimulus, by the way, Brian, is starting to wear off for some consumers as checks slow down. And there are the expiration of some of the benefits like unemployment benefits and others loom in the near term. So got to keep an eye on the consumer to see where the market's going. But as speaking of the Delta variant, I got to, tease out the fact that we are probably going to be looking towards a stock in the healthcare sector today. So we'll get more on that later. But one other thing I've noticed in the market today, Brian, is the big spike in the VIX. What's going on there? It had come down for quite a bit into a soft, comfortable territory, I think, for market participants. But now we're edging back up to that 19 level, which is, the historical average. Anytime you get over that, can be worrisome.
Right. And so I have my VIX watch list up here once again. And you talked a lot about the economic news that is in the marketplace, but we do have some global news. Obviously, there's a lot going on in Afghanistan. All the major countries are chiming in and talking a little bit about that. And there was some concerns yesterday that the markets might actually react negatively to all the global news. But what actually happened yesterday is we kind of had a meandering up day once again. Now we see the markets down today. And with the downturn, well, yesterday we actually saw the VIX kind of creep up a little higher, even though we had an up day. And then today, we now see a big spike up in the VIX. And that's because a lot of people are maybe thinking that we're reacting to this political news, what might be happening with the energy companies, a lot of other little factors out of the news that's coming out of Afghanistan overall. So let's do a quick review of the VIX. We see the VIX right now trading at 18% right now, 17.99. It's up about 11% on the day. But one thing that I do find interesting is that the September futures contract that I'm highlighting right here is still just above the 20% level. It's trading at 20.54, and the October is 21.75. Now they're up a little bit today, but not a big spike up because of the news. So we're seeing the spot or the actual VIX index make a big jump today, but we're not seeing the futures contracts move as much relatively, which I think overall is a good sign. I think people are just a little bit more nervous about what's going to happen here in the short term based off of all of the world news that we have. So if I highlight and I go over and I just look at our VIX chart, I always like to see that 20 level. We're still below that 20 level. Some might have thought that with this news, we might have jumped up above that level. That level is kind of the line in the sand between high volatility and low volatility in the marketplace right now. Or one other way to say that is when we get above 20, there's a little bit less certainty in the marketplace, a little bit more uncertainty overall. And being below that level, I think overall is a good sign, and not seeing the futures markets move as much shows that people are not quite as nervous, or the markets are basically ignoring, if you will, besides the downturn in the market today. They're kind of ignoring a little bit of the global news that is happening in the world. So with that said, I'm going to pass it back to you, and we're going to talk about kind of a defensive play a little bit in the pharmaceutical companies. We're going to look at Regeneron, and we're looking at Regeneron more on a technical basis today. Regeneron has been a stock that it's not at all-time highs. They've obviously had played a big part before the vaccine came up from all the different pharmaceutical companies, because they have a little cocktail that kind of helps you out. If you've got COVID, and that cocktail is actually, they're kind of saying, might help you out before you would get COVID. So Regeneron is back in the news. People are talking about it. It's got a decent valuation. I'll let you talk a little bit about it. But the main reason why we're talking about Regeneron, and I'm going to highlight a few things here. We obviously have had a fairly strong move to the upside. We had a little bit of chop right in here, but everything is in line. We got the 200-day. Then we got the 50-day, and then we got the 20-day. We're above all those moving averages. But this area right here, going all the way back to July of last year, is a very interesting area to me. And it broke out yesterday, and we've confirmed it today. So two good things that are going on. We had a breakout, and that's always good. But a lot of times in the technical analysis world, you worry about the breakout and fail, and that becomes a bearish sign overall. But we had a continued breakout, even though the markets are down. So we got a fairly strong move today in Regeneron. And you see the level that we were talking about right here. We got how many different touches in this area? We got a lot of noise right in this area, but we bounced right back up here. And let me grab when was that? That's in October. And we came all the way back to this area that we're highlighting on our trend line here, we'll call it 620 area. And then we had the breakout just the other day. And now we've continued on up. So now we're trading right around the 640 area. So what would be good technically for Regeneron is obviously setting new highs. New highs are good things in most stocks. Shows that you have a little bit of momentum. Now, here's the previous high back in July of last year. Is trading right around 663. So that's an area that's going to do a little bit of resistance if we get up to that area. If we go above that, well, then you get a little bit more bullish on the Regeneron. And with that said, let's talk a little bit about the fundamentals of this company, and I'll pass it back to you, Lindsay.
Yeah, thanks, Brian. That was a great technical analysis. I always love looking at the technicals and comparing and combining it with the fundamentals to really get the true story what's going on with the stock and to make a decision on if you want to make a trade or not. Before I dig into the fundamentals, though, I want to remind all of our viewers that Brian and I will take your live questions at the end. All you have to do is write them in the comment box on the right-hand side of the screen there, and we will get to as many questions as we can at the end. We love being interactive with you guys. So looking at Regeneron from a fundamental perspective, like Brian mentioned, this is a stock that is a healthcare stock that is in the COVID fight, but it's not getting the airtime that a lot of the vaccine makers are, like a Pfizer or a Moderna. Moderna has had unbelievable performance since that March 23rd low that I mentioned earlier. And Regeneron has done well too, but like we see into the end of 2020 and the beginning of 2021, a little bit of a hiccup. The stock has struggled a little bit, but now we're at some really interesting levels. And the antibody cocktail, like Brian said, that they offer, it is stepping up to the plate, if you will. It's been used specifically in response efforts to some of the states where we're seeing COVID cases with the Delta variant really pick up steam, like in Mississippi and in Florida. So this has been one of the solutions that hospitals have used for patients that do come in with this new variant. And it has been proven to show that it helps reduce symptoms and can potentially prevent death for patients that do have this strand of the disease. So, and in July, the FDA, by the way, they expanded its emergency use authorization for this drug, as the treatment can be used in a preventative manner as well. So there, from a fundamental perspective, this is an interesting looking stock. Also, if you look at the performance, like I said before, it hasn't run as far and as fast as some of the other COVID treatment or COVID vaccine stocks have. So from a fundamental perspective, when I look at price to earnings ratio, which is something that I always like to look at when I think of fundamentals, this is a stock that is currently trading at 15.4 times its 12 months forward earnings estimates. And that's below its historical average of almost 20 times. So that's a nice discount there. When I look at the healthcare sector overall, it's trading at a slight premium to its historical average, though at a discount to the S&P 500. And so the healthcare sector is something that from a strategy perspective, I've been talking about more recently a lot, because I see it as a defensive play, especially as you're concerned about the growth concerns that the Delta variant could cause. But one thing that I can always say about the healthcare sector is it's a pretty steady eddy when it comes to earnings. It consistently beats earnings estimates on the top and bottom line. And it's just, over the long run, has been an outperformer versus the S&P 500. And that's because it carries a pretty decent dividend yield to it, which is a bonus for those investors that are looking for a little extra kick too. So now that's the healthcare sector in general. Regeneron, I didn't check. I'm not sure. I don't believe it offers a dividend yield at this point in time. But anyway, so that's kind of the fundamental story on Regeneron. It's looking interesting here from a fundamental and technical perspective. And especially if you think there's a little bit of a rocky road ahead with regards to the growth story in the economy or earnings. So Brian, with that, I want to pass it to you to give us the stock play of the day with Regeneron.
All right. So I always have to emphasize that none of this is meant to be a recommendation. Whenever we're looking at the stock play of the day and trying to come up with ideas, we're always just trying to look at strategies inside the options playbook, but that might apply to the pricing conditions that are going on in the options marketplace. And before we get started, I'm going to point out the fact that Regeneron, one of the problems with it, with the volatility that's in it, is we get a little bit wider markets. We have decent open interest, which basically means we have a decent number of contracts that have already been established in the options marketplace, and a lot of the options have okay volume. But a lot of the volatility sometimes will widen the bid-ask spreads on the options. And because of that, we're only going to trade spreads in this. And we're going to manage our risk with this spread overall. Not to mention, we talked about the global news that's going on. So we're going to take a little bit more of a short-term outlook. And this is based, Lindsay gave you a great idea behind the fundamentals on Regeneron. And I'd be a little bit more interested in Regeneron fundamentally, if we broke above that 660 level to go along with the technical analysis, so we have a breakout to new high, solid fundamental story overall. But with that said, I'm highlighting the Ally Invest option change right now. And Lindsay mentioned the dividend, and I'm going to highlight that, yeah, Regeneron does not pay a dividend. It's already announced earnings. The only earnings that are really out there right now that are worth mentioning are a lot of the retail stocks. We see that Regeneron is up about 2.3% today. So we looked at the stock a little bit on the open. That's when we were talking about it, Lindsay and I, before the open today. And we do see that we did have the follow through on the stock to the upside to make it a breakout officially, technical, as a technical analysis person would look at it. And I'm going to go out 17 days. And I'm going to manage my risk in this underlying by buying one option contract and selling another option contract. And I'm going to highlight that we do have wide bid-ask spreads, and that's what makes you nervous. But one thing about doing a long call spread is that you're giving the marketplace or the market makers a buy and a sell. So midpoint fills are easier to do. You're just going to have to work the order a little bit here. So I don't want to just be buying options outright, because look at, we just bought the at the money option contract. We're going to be paying $3 for that, or we got a $3 spread, which is actually wider than it normally would be in this underlying. So I don't, and it's really hard to work individual option contract and get something of a midpoint fill or just a decent fill overall. When you give them two option contracts, that lets the marketplace kind of work itself. You're giving them a buy that wants the market to go up and a sell that wants the market to go down. So a lot of times you can get a little bit better fills by doing two-legged trades or spreads I'll call it illiquid stocks. This is a fairly liquid stock overall, but the option contracts, just bid-ask spreads are trading kind of wide. So I don't want to beat a dead horse here. If I'm looking at this and I have a 10-point wide spread, I'm going to manage the risk, and I want to give myself more upside than downside. So in this instance, we're going to buy the 645 strike call. Now, this is a speculative trade. We're trading only over 17 days, and we're hoping that we're going to get to the high end of that trading range, and we're going to sell the 655 strike call. Now, I don't mind selling the 660 because that's the all-time high. It's not a bad place to sell, but I don't want to risk that much capital. This is just the stock play of the day, and if we do that and we give ourselves a wider spread, we get more upside potential, but it's going to be more risk on the initial. So we're just going to be buying this. Let's call it $4. I'm going to make it the official paper trade. I'm going to put it in the right rail, try to work it at $4. It makes the math really easy here. So I'm going to click on that. That makes it a limit. We're going to go in here and we're going to go $4. We're going to make that the official paper trade for this week. You might have to adjust that trade. There's never a guarantee of a midpoint fill. So just keep that in mind if you're trading the real markets as opposed to on paper. So we're looking to buy one of the September 3rd expiration, 17 days away, 645 strike call. And at the same time, selling to open that same expiration, 655 strike call. Looking to pay a net debit of $4 to your account. That means for every one-by-one spread that we do, we're going to have $400 plus commission as our total risk for this trade. Now, the width of the spread is 10 points. So the maximum that this spread could trade for at expiration, if it is above the 655 level, would be $10. You take $10 minus $4, that means you got 6 points worth of upside. So if I do this, let's take a real quick peek at the profit and loss graph down here. And you see that because we have some volatility and we have an expensive underlying stock, this colored line is as of today. And when you start out on this trade, you don't have a ton of risk to the downside and you don't have a ton of upside potential. And a lot of that is because there's so much premium. You're buying an option contract that wants the market to go up, and you're selling an option contract that wants the market to go down. So they fight against each other until we get closer to expiration. And then you'll see this colored line start morphing towards the dotted line. So I'm going to take this all the way down. Let's go to 0 days to expiration, which means there'll be 1 day remaining. And all of a sudden you start to see the as of today line start to morph into the colored line. And you see your profit potential gets better if you're correct on your forecast closer to the expiration date. So that's part of the reason why I don't mind this type of trade. See if it's trending in your direction. If it goes against you, I'm paying $4 for this. I might say to myself, my line in the sand is going to be $2. If I lose $2 on this trade, it's trading for $2, I'm going to get out. If I'm up $3, I might want to get out on the upside. And that's the way I would manage the risk if I'm going to manage the trade. But I don't mind you just putting this trade on and see where it is in 17 days and see, did I lose my $4 or did I make my $6? That's one of the wonderful things about a spread trade, is that you can manage your risk up front on that trade overall. All right, so a little bit long-winded, but when you're dealing with illiquid option contracts, you got a lot of people just lay down until the urge goes away and don't trade them. I like the chart today. We talked a little bit about it, but this is the whole point of stock play of the day, is to learn, if I have this situation, what is a strategy from the options playbook that might apply to that strategy? And that's really the theme of the stock play of the day, considering that nothing here is really meant to be a recommendation overall. So with that said, I don't have access to any of the questions, Lindsay. Do we have any of them out there that we can try to address today? And by the way, welcome back, Lindsay. It's been a while since you've been on the stock play of the day, so I didn't get a chance to mention it earlier, but it's great to see your smiling face again.
Oh, thanks, Brian. It feels good to be back. It has been quite a while since I've been on stock play of the day, but I'm back now, and it's been fun so far. We do have a question in the chat, and I'll remind everyone else watching us right now that we are going to take as many questions as we can till we hit 12:30. So feel free to type whatever's on your mind in the box. So Charles Willis, though, is up first, and he says, is Regeneron a cyclical stock given the technical pattern in the chart? I'll give my response, and then Brian, feel free to jump in. To me, Regeneron's not a cyclical stock. When I think of cyclical, to me, that's a stock that is dependent on the economic growth of the economy. So it usually follows the pattern of the economy, and profits follow suit. So, and as such, so will the performance of the stock. So that's kind of how I think of cyclical stocks. But Brian, I don't know if you want to jump in.
Yeah, I'm happy to chime in a little bit. One of the biggest things is just pharmaceuticals in general. You're referencing the chart and some of the volatility that we've had recently in the chart. And that's one of the things, is whenever you're trading pharmaceuticals, you got to keep an eye on the news. I mean, is there a new drug that's coming out? Are they in phase 2 trials? Are they in phase 3 trials? So that does obviously drive a lot of what happens in any pharmaceutical company, especially one like Regeneron, where they're really breaking boundaries and coming up with new solutions overall. So the charting pattern, if you looked at it going back over the last couple of months, there's really nothing that interesting in the charting pattern. Obviously, I don't care what industry that you are in. If you break a new high and the stock is trending higher, most people in general like to buy stocks that are going up as opposed to going down. There are some people out there that like to try to catch a falling knife, but in the technical world, usually it's considered better if we're reaching new highs, we're breaking through some channels, and we're setting new boundaries to the upside. So a lot of that volatility, I would once again agree with Lindsay in that it's not really a cyclical stock. That volatility is news-based, which happens in a lot of pharmaceutical companies, especially one like Regeneron, which is always on the cutting edge of new drugs overall, new pharmaceuticals. All right, next question.
Yeah, that's really well put, Brian. But that just made me think of a question that maybe might help our viewers is, when you do see a stock like Regeneron, and we're seeing it pop today to over 2%, does that change the way you think about the option strategy around it? Or do you wait for the stock to cool down, or does that not matter?
Okay, well, the pop today, we would have liked to seen a little bit smaller pop. In other words, I think we would have liked to have done the stock play of the day at 9:30 Eastern time when the market initially opened. That's when we got the confirmation that the stock is actually continuing above, breaking out to that new high based off of what we set back in July of last year. But with that said, it makes you a little nervous that we've had pretty much a straight line up, but there's always going to be something that's going to make you a little nervous. So that's the main reason why in this strategy, we managed our risk. We're giving ourselves 6 points of upside and 4 points of downside overall by trying to work this trade, trying to fill it at the midpoint. So that's the wonderful thing about options. There's always, if there's something that's going to make you a little nervous, and my nervousness really comes from the fact that the chart is basically parabolic over the last 30 days. I love that it made the breakout, but it's still a little frothy relative to the 200-day moving average. So let's use some options. Let's take a shot at it. Let's manage our risk. If $4 is too much for you to risk, if you see that thing trading for around $2, and that means the market went down, maybe you just close it out and you move on to the next trade. But overall, we're in the pharmaceutical space because of what's going on or I should say globally, not politically. What we see going on globally across the markets, it's added a little nervousness, made the VIX spike up a little bit. So this is one way that we can keep a toe in the water. And maybe if we get that breakout to the upside, well, then you do something different. Maybe you buy some stocks. Maybe you just buy a long call and get a little bit more bullish on that underlying stock. This is, you can almost look at it as a fear of missing out. I want to be in the marketplace. I want to play a little bit. And I'm going to use options to manage my risk so that I can still participate.
Right. Yeah. Well, our buddy Wayne is back. He says we have a
Hey,
house. Good to see you, Lindsay. So nice to see you, Wayne. Good to be back. But he also asked Brian, I always get confused when my bull call spreads go against me. If I should close the position or should I open a bear put on the same stock to hedge myself? What do you suggest?
Well, Wayne, we've talked a little bit about this. And the one thing, and you can go back and review some of the stock plays of the day. Well, let's say the market did go down. Now, Regeneron's a little bit tougher because it's going to be a mover, right? So, but if you are watching the markets and you get an opportunity, one of my favorite things to do is just sell another short call spread against it as a hedge. So you're not going to get, like, if the spread is trading for $2, right, I'm going to sell a call spread that will generate a butterfly. So now I feel like I have to do that. I only got 1 minute before we get to the 12:30 to the witching hour. But in this situation, I can do it real quick. Like we sold, we got the bull call spread on. Let's say the market goes against me and I see my spread trading for $2. What might I do? I might sell another one of the 655s and then buy the 665. And I'm going to click on that right now. And that would actually generate a butterfly and bring a net credit into my account. I wouldn't be adding additional risk to the position because a butterfly, as long as the width of the spread is the same, and we have a 10-point wide long spread and a 10-point wide short spread, we're totally fine. But I'm going to bring in a smaller credit, take a little bit of the risk off the table. But if the market does bounce back, I still got an opportunity to make money on the butterfly. So that's my favorite adjustment on a butterfly. And we got 2 weeks for that to happen. So if over the next week we saw the market trending down on this, and I had that opportunity to maybe roll into a butterfly, that is an alternative that you might want to think about. We've talked about it a lot on the stock plays of the day. If you want to get into a little bit more detail, go back and watch some of the previous episodes overall. But that's the way that I would approach it if I want to get a little bit more complex on my trade, like it sounds like you would be willing to do, Wayne.
All right. That is all the questions that we have. And we are at time, Brian. So that's going to do it for this stock play of the day.
All right. So I'm going to tell you, I've been on vacation for over a month, and I picked a great month to be in Wisconsin, considering the humidity and the rain in Charlotte this month. So I'll be happy to be back in Charlotte. We've lasted as long as we can up here. It's been almost a month that I've been up in Wisconsin. There won't be a stock play of the day because I'll be stock play of the day overtime this Friday because I'll be driving back with my family back to Charlotte from Wisconsin. But there will be another stock play of the day on Monday. So please make sure you click subscribe and ring the bell, and we'll see you this coming up Monday for the next stock play of the day.
Tuesday.
Maybe we should switch it to Monday. No, we'll go Tuesday. So it'll be this Tuesday. All right.
Yeah, we'll see everybody on Tuesday.
I've been on vacation too long, enjoying the weather and the hot sun too much.
Yes. You deserve it, though.
See you next Tuesday, everyone.